Good evening, everyone. Time for another silver update. This is the 1-minute chart of the Euro US dollar cross provided by netdania.com. You can click on the link below. You can see that the uptrend has continued and has gone into a breakout with the news of the Greek vote to continue or go with more bailouts, with the New Democracy Party winning, and the Communist Party did not come in first as some had feared. So this may have been an initial relief rally. You can see that we're beginning to sell off now and at least fill the gap. So we'll see if once we fill the gap we turn around and go the other way. This could be spun as relief in the sense that the effect of the Greece leaving the euro and the shock that it would bring was already kind of built into the market, and then this is a relief rally based on that not happening. Then again, this sell-off here that we're seeing could be the realization that Greece staying in the euro is just a further negative for the euro, because more money is just going to be poured down a black hole. And that's because, as I'll show later, things just keep getting worse and worse. So let's look at silver, because silver actually is the most volatile based on this news. You can see that the silver price jumped all the way above 29 and then sold off all the way down to 28.35, rallied all the way up to about 28.9 almost, and now is sold off to about 28.50. So real volatility going on in the silver market, and of course there's really no explanation for that. If we pull up the volume, we can see that it's really not any significant volume that this has happened. So mainly just the traders running people's stops. And why is silver the most volatile of any of the markets? Nearly 2 and 3% moves here. Well, because in my opinion it's the most manipulated of all the markets. So that's just a confirmation. Gold has kind of rallied and then stalled out. Of course, it had the initial sell-off as well, and then a rally about up to the same level, and now we're just pretty much flat. So pretty big non-event there. Over to the crude oil. The crude oil really is the only market that has reacted and gone the same direction, and that's up. So you can see that, well, it's not here on the chart. We got to back out a little bit. There was an initial sell-off spike. I don't even know if that's a valid tick. Maybe it is. Down to 83, and then a spike all the way up to 86. So almost a $3 range. But oil is pretty much hanging on to its gains. So that's the reaction to the Greek election in the markets. We're going to visit the story a little bit more later. Let's go over to the question of the night from iDoc. He says, "Hi, Brother John. I'm so thankful for your videos, blog. It has opened my eyes to so many things, with investing in silver being just one of them. My question concerns U.S. Treasury bonds. Since the Fed has agreed to keep interest rates at 0 through 2014, wouldn't the investment of the century be to short the short-term Treasury market, since the rate has nowhere to go but up? This is probably one of the biggest bubbles of all time. Or is it possible for these rates to become less than 0, thus wiping out this investment strategy? Is it even possible to short the Treasury market? I know that investors in Japan have been killed this way, waiting for their interest rates to rise. But didn't the Japanese have, although not anymore, a very high savings rate, which obviously the U.S. does not enjoy, to support their QE to infinity ZERP policy? We all know that the markets can stay irrational longer than you can stay solvent. I'm mostly in precious metals now, but it seems like rates will have to rise at some point when inflationary pressures become more obvious, thus breaking the Treasury bubble." Well, there's a number of ways you can play the interest rates. The first being the futures. You can buy futures contracts. You can short them. All of the different treasuries. The T-bills all the way out to the 30-year. Anytime you trade in the futures market, you have the problem of rolling over those contracts to the next active month, which is going to happen to you about every 3 months or so. You're going to take a little bit of a loss on that from the spread. You have to buy and sell, etc. So That's not really optimal to play that market. You have the options that you can invest in, but then those have time decay. And then the other option you have are the ETFs, and that's what we're going to look at. Now, I did a cross here of two of the silver ETFs. One is the AGQ and the other is the ZSL. The AGQ is the long double ultra silver. The ZSL is the ultra short silver. So the reason why I cross these charts is to show you, and I've pointed this out many times before, that all of the ETFs have built-in decay, and that has to do with how they pay for them. It also has to do with the way the prices are calculated on a daily change basis. So what that means for you is that ETFs, and they'll tell you in their prospectus, they're short-term trading vehicle. In other words, if you invest in them, you're going to lose money, pretty much. But then there's the other side of that, and you can see that in this cross. The AGQ, for this time period, this goes back to about the summer of, well, it's a one-year chart. So about 1 year ago, they're at a zero line. And you can see now the AGQ, the ultra silver, is down 45% in 1 year, while the opposite, the ultra short, is down 30%. So that shows you right there that there is decay in the ETFs. Now, the way you play that, hopefully I still have the charts that I pulled earlier. The way you play that is you short the opposite of the ETF that you're looking for. So this is a cross that is the 10-year note and TLT. TLT goes up when interest rates go down, and this is the interest rate on the 10-year, so those are going to move in opposite directions. But you can see the difference again in the ETFs. You can see that both of them, one is up just a little bit, the TLT, but the other one is down quite a bit. So one way, and again, I can't give investment advice, this is just my observations, and this is what I would consider doing if I were interested in making a play here. What one could do is short both of these, just like the AGQ and the ZSL, match them up and short them, and then adjust and try to lock in the loss in the ETF. You're not really playing the underlying at that point. You're just simply playing the guaranteed loss of the ETF. If you wanted to play the TLT, you could short the TLT and you'd probably be fairly safe. You can see it's up 30% while the other is down 45%. That's on the 1 year. And the 2 year, it's about the same. The 5 year, I don't think we have the data. Yeah, we do. It's about down 65%, but up 45%. So that still could be quite a loss if you shorted the TLT. So if I were to do some kind of treasury play at this point, I would probably be looking at shorting the TLT to try to lock in some type of ETF decay, while at the same time making a bet against the treasuries or betting on higher interest rates. And if we just go sideways, as the question implies, then you would have that time decay of the ETF working for you. So let's look over at some of the Greek stories here. This is the end of the article that just came out a few minutes ago. Supporters of the bailout claim victory in the Greek election. I'm just going to read the last part of this here. For many Greeks, the election was a choice between hope and fear. Syriza, now that's the Communist Party, had billed itself as a kind of Greek spring, capturing the momentum of those hungry for change at almost any cost from a political system that is widely seen as corrupt and ineffective. It also had support from voters who felt betrayed by the socialists, whose party was in power in 2010, when Greece signed the first of its 2 loan deals with foreign creditors. New Democracy, that's the party that won, tapped into different fears of the unknown, of illegal immigration, of an exit from the Eurozone. Its main campaign advertisement showed an elementary school teacher telling his students which countries use the euro. When one asks, "And what about Greece?" the teacher stares back in stony silence. "Why, teacher, why?" the student asks. In the end, fear of imminent collapse as opposed to the slow death of their economy and society appeared to drive a majority of Greeks to New Democracy. As he watched the election returns out at an outdoor cafe, Nikos Theodosides, 69, said he was glad the New Democracy won. "This is the only way for the country to move forward," he said. "Staying in the Eurozone, despite all its problems, is much better than the alternative." Panagiotis Pierakis, 48, an Athens taxi driver, said that he had voted for Syriza and that although it did not win, he thought the results had sent a message. The election, he said, was a message to Europe that you are not the boss, Ms. Merkel, or anybody. A reference to Chancellor Angela Merkel of Germany. Quote, "We want somebody from our country to oversee our economic system." So that's kind of the take on the street of the election. In my opinion, it just means more of the same. It just means more bailout money and deeper debt and a longer and deeper road to debt slavery that the Greeks are already on. And just to show you what the outcome of that has been, I pulled up some charts from Trading Economics on Greece, and you can see that it's been pretty much a straight line ascent. This is the unemployment rate. It's nearing 25%, and you can see at the beginning of the financial crisis it was as low as about 6 or 7%. So doesn't look from the unemployment rate like any of these bailouts have done any good for Greece. Of course, we can pull up the stock market, and let's pull back out maybe a couple of years back to the crisis. You can see we ran from about 5,000 on the Greek stock market all the way down to 500. So there's a 90% loss in the Greek stock market, and that's just unbelievable loss. The interest rates, of course, those are going to be on the euro, so those aren't going to give you any information. The GDP growth rate would probably be a good one to look at, and we can see that since the financial crisis, GDP has pretty much been negative or flat. The inflation rate, that's probably going to be affected by the euro, so that's not going to be very accurate. But then again, inflation rate of even 2% while everything is going into the toilet is not exactly good. And then we can do government debt to GDP, and you can see that since the crisis, government debt to GDP has just risen astronomically, nearly increasing by 60% between 2008 and 2012. So whatever the supposed benefits of these bailouts that Greece has been receiving are, they don't seem to be indicated in any of these charts. And my guess is that these numbers are just going to get worse. It probably would have been better for Greece, and I've been saying this for a long time now, that if Greece just repudiates their debts and leaves the euro and goes back to the drachma, completely repudiates debts, just let all the bankrupt entities go under, and begin to restore industry there, which could be incredible tourism, because a new drachma would be a very, very cheap relatively to the euro and the dollar, etc. And you could do something about that horrendous nearing 25% unemployment rate. So I think that today was probably a bad outcome for Greece. It would have been better to just repudiate the euro and leave, which I think is going to happen anyway, ultimately. but unfortunately it's just going to be more pain in the long run. So back to the charts. Silver is acting pretty crazy on this news, but then again, silver's very volatile, so it still seems to be rounding down, and we're going to see if we can rally from here or if we're going to go down and test that 26 again. As you know, the 26 has already been tested 3 times. We can see that on the daily chart. We've got, well, 1, 2, and then nearly 3 times there. On this chart, we seem to be looking weak. Certainly nothing like the rallies that we had back in these times. But then again, there's more support coming in a lot of this churning here. So we'll just have to wait and see which direction the economy goes as a result of this Greece news and what the central bankers decide to do as their next move. And we'll talk to you next time.